Hi and welcome to this live currency strength indicator table video with me, John, on Wednesday the 8th of March. Here you can see we have our two types of tables in front of us. We've got the trend traders table and the day traders table. These are showing the same studies but just highlighting different time frames. You can see here some of the currencies are highlighted in green. That means there is a confluence between those currencies, and that's where we'll be focusing our attention in these videos. Tables auto update every 5 minutes 24/7, meaning that our members can see how the market stands right now in real time. And you can see that the board is pretty much lit up full today apart from two currencies. The rest are showing confluence, so that means that there's potentially quite a few currency pairs that you could look at when you get to the chart here, or the table here. So what you want to do when you're loading these tables, what I like to do in particular, is have a little look at where the day traders table is, and then have a little look at the other currencies surrounding that. So we're going to focus on Aussie US dollar today. The reason being is because the dollar is the strongest currency at the moment on both tables, and the Australian dollar is the weakest. I'm going to take a look at New Zealand US dollar as well. We can see that the Kiwi is the third weakest currency on both tables as well. So if you were looking at other currency pairs, then you could potentially look at Aussie Swiss downside, Euro Oz upside. We've talked about those two currencies really recently, so we don't really need to cover those again. You could look at potentially New Zealand Swiss and Euro Kiwi as well. But we're going to dive into Aussie US dollar first. And you can see here I'm on the daily time frame of Aussie US dollar, and you can see that price yesterday drove quite aggressively to the downside, and that was due to the FOMC, or I should say Federal Reserve Chairman Jerome Powell testifying in front of Congress and talking about the possibility that the Fed are going to start hiking at a faster pace to try and fight the strong data that we've been seeing coming out of the US quite recently. So that sparked that US dollar strength in the market, and Aussie US dollar broke through the lows here at the 0.67 handle and traded down into these most recent lows here, which is around about the 0.66. Now, we were talking about getting short Aussie US dollar when it was in and around this area here. In fact, we were actually looking to see if it would come a little bit lower, a little bit higher, around about the 0.68, looking for the shorts. So limit orders here with the 50 pip stop loss, and then we were looking to target down into the next level of resistance, which would be 270 pips away, and we didn't quite get that pullback we were looking for. Instead, what price did, it kind of formed a double top pattern and then traded to the downside. So unfortunately for us, we didn't get any opportunities there. However, the 0.67 handle could be the next level of interest. If you were to limit order here, though, you'd have to have like a 100 pip stop, and the target is around about 178 pips away. So you're only going to get a 1.7 reward to risk ratio if you were risking 100 pips. So what I would prefer to do in this situation is wait for price to pull back. So if price starts to pull back into our area of interest, back up and recover the sort of aggressive moves that we saw yesterday, and we got back into the 0.67, I'd be looking at a lower time frame for a change of trend essentially. And when that forms, it's a strong possibility that price could continue to trade to the downside. So I'd be looking for that kind of opportunity in and around there. It lets us have a closer stop loss, and then we can extend our reward to risk ratio. So that's what I'm looking to do here, and then I'll be targeting the 0.6525 handle for Aussie US dollar. Now, if I just go back up to that daily time frame, it's actually been quite a interesting market in terms of narrative, because you can see that we had this inverse head and shoulders, price traded higher. We've then had a normal head and shoulders, and price has traded lower. So it's quite interesting to see that we had those two types of reversal patterns. And what I've done is I've actually marked up the neckline at the 65.25 of this lower inverse head and shoulders pattern to be tested. So if we were to see a recovery into the 0.67, that's what I'm going to be looking for a move back down into this area. But how likely that would be right now, obviously we don't know, because if the dollar does continue to strengthen, price may just push even lower, and in that case you want to be looking at your lower time frames to see how price reacts. You can see there's quite a large gap there that I expect price to come and fill. You know, if we trade above that high there, I'd expect to move up to the next level of resistance, which could be the 0 spot 66.50 area, which is just in here. Okay, so just something to be aware of. But Aussie US dollar could potentially continue to trade to the downside. Another currency pair of interest then, so like I said, Kiwi dollar as well. I like the idea that the dollar strength's come back into the market, so we'll go take a look at Kiwi US dollar as well, just to kind of give you a little bit of a warning that price is coming back into support. So I'm on the daily chart here. If I zoom out a little bit, you can see that the 0 spot 6075 could be a potential support. Now, if I was to kind of bring in the context of a bigger time frame, you can actually make out a potential inverse head and shoulders pattern here. So this area could be quite interesting to see what happens with price. Do we get a bit of a move back to the upside, a bit of a move back towards the 0 spot 65 handle, or does price kind of break down through this level and we trade down to support? Now, because the dollar strength is in question here, this is what I'm going to be looking for. I'm going to be looking to see if price will trade through this level and continue to the downside. Alternatively, can we pull back within this bearish channel and look for the continuation to the downside? Again, if you want to limit order this area, you could look to target the 0 spot 62 for your entry. You'd need a 90 pip stop, but you could target 120 pips to the downside or 350 pips to the downside. So potentially some opportunities around Kiwi US dollar as well. I'm gonna leave it there. My top chart that I like though is Aussie US dollar. I'm looking to see if price will pull back after the aggressive move to the downside yesterday. If it does, then it could offer us a short opportunity. Thanks for watching this video, and I look forward to speaking to you in the next one.